want to get your thoughts on what,
Sure.
as we see Lyft today and then other big name so-called tech unicorns going public as expected throughout the year, what this could mean in terms of some of that money being freed up from early investors for startups. Do you expect that we are going to see a direct impact between the two?
No, I think it actually would be the reverse. I think you saw $99 billion go into the venture capital world in the U.S. startups this last year. That's a record since 2000. So I think when people begin to see these large investments where they invested $4.9 billion in Lyft and they see the return at $27 billion based upon the stock today, if it prices in the range you said, I think it will encourage doing both. The second part of the question, I think, is a really important one for your viewers. And I'll give you some data because I've seen every movie there is to see, the upturns, the downturns. And let me just walk through 3 examples. The early stocks in a major technology business model change are the ones that benefit the most. Go all the way back to Cisco. I just happen to know those numbers pretty well. If you spent $1,000 on Cisco in January of 1991 in the market, you would have made $156,000 over the next 2 decades. If you were to look at Google and Facebook as an example, a next generation, 10 years later, of companies that really took off, and they waited longer to go public. They would go at $23,000 return for Google for $1,000 invested IPO, $4,000 for Facebook. So the longer companies wait to go public, the leverage goes out of it a little bit. That doesn't mean that Lyft is not a good investment. I think it probably will be. So use Cisco 5 years later, not 1991, but 1995. If you invested $1,000 in Cisco in 91, you'd have made $156,000. If you invested $1,000 in Cisco in January of 1995, you would have made $17,000.
John,
so
why do you
think the longer companies wait to go public, the less returns. But I think it looks good if you're early on in terms of the key trends.
John, you said you're inclined to think that Lyft is a good investment, even at the IPO. What's your calculation there?
It's very simple. The early movers on new economy moves are the ones that usually win. You saw it in the internet, you saw it in social media, etc. But for your viewers, please don't bet on one stock. Even the best venture capitalists in the world, the Andreessen Horowitz, who are one of the drivers of this, the Sequoias of the world, the Kleiner Perkins, they will tell you they do not know the companies that are going to be their stars. They know if they invest in 30, if they're good, 2 or 3 break away. Your readers and your listeners ought to do the exact same thing. It's got to be a portfolio play. Picking a single stock is very high risk in terms of the opportunity. But getting the early trends, I think, is key. And you're going to see 333 other unicorns coming to the market. That's up from 80 just 5 years ago. So I think we're at the front end of both job creation and the front end of opportunities.